We've had a pretty good rally based on the idea that the tariffs are actually going to be lower than they were originally planned. But what the market is overlooking is that on a 6-month basis, global tariffs have just gone up, okay, especially from the US. So market is trying to discount that, yes, now 10% is here to stay, and at the most by the year end we will have agreed to something closer to an average of 15%. Worst case, if US needs more money, they will raise it to 20%, and again it will be country specific. So now that is going to get discounted by the markets in terms of what is the end outcome of tariffs. Now that you know that outcome, and remember, it's not going to be 90 days, that 90 days will again get postponed to another 90 days and then another 90 days, and by the time you know the final things from every country, it will be 6 months or 1 year from now. So what do we start thinking about? Because this part is done, markets are done discounting tariffs, and now we're going to switch to looking at macros again. And it's not just going to be about earnings growth, it's going to be also about the bond yield. Yeah, the elephant in the room, which was there 6 months ago, 1 year ago, even 2 years ago, keeps coming back to haunt us every time bond yields move beyond 4.8%, closer to 5%, and then there's a sort of panic. Now we've gone past 4.5% yesterday. Nobody is panicking yet because we've been here for a pretty long time now, almost for 2 years we've been gyrating in this range. So only a breakout of this range is going to open eyes again. But the setup seems to be getting there as to, we may break out, So you're seeing bond yields rise every day. Slowly you're seeing the dollar find support, and yesterday you finally saw a lot of the commodities also sell off on that. But equity markets are still being ignorant of this, elephant. So let's see how long that goes on. Last year, the correlation between September and December for the Indian stock market with US bond yield was very, very high. Yields were rising, stock market was falling on a day-to-day basis. Then that correlation broke away. Will that correlation come back? Because, emerging markets are the ones that are most impacted by rising yields or rising dollar. So let's see if that comes back. Yields are rising. The dollar is starting to show signs of rising. USD INR itself is showing signs of rising. What we have to watch out for is at what point of time does the market react and to what degree? Because the degrees have also varied over the last 2 years. So degree also becomes an important thing. But to some extent, some impact definitely should be looked upon and expected.